it's extremely significant and very exciting to see a key developed market coming to the green bond sovereign market. And I think that this will really provide a benchmark for other sovereigns who are looking to issue and essentially display their green credentials to come to the market.
You made an interesting point in your notes that the current format is backward-looking in terms of use of proceeds, but a forward-looking approach would increase green projects. Can you just explain a little bit about how you think the format should change?
So currently, the proceeds are looking back to the 2019 budget. So in a sense, the issue of additionality, how it spurs additional investments in green projects is likely to be a factor that we'd like to focus on. So if you actually had a forward-looking assessment in terms of what green projects would need to be financed, we believe that that would be a much more focused view in terms of additionality in terms of the budget expenditure.
Some critics have argued that this type of debt does little to incentivize governments to increase funding for environmental projects. Do you think that's a fair criticism?
Well, I think that we have to look at in terms of the overall environmental framework that each sovereign is looking to tackle, not just specific forms of financing when we're looking at, whether this financing or this particular bond will actually be additive and actually move the sovereign forward in terms of achieving its environmental goals. So in that respect, I think that looking at Germany's overall environmental policies and whether it's on track to meet its 2030 and 2040 targets is essentially very, very critical. And what we as investors look at when we're thinking and assessing issuers from a sovereign issuer like Germany.
Well, I guess on that note, we can look to another country that's been in focus in this arena, and that's Mexico. This week, Mexico became the first country in the world to issue a sovereign SDG bond, so an instrument that is tied to the United Nations Sustainable Development Goals. And it was interesting reading commentary from UNDP saying that the issuance of Mexico's SDG sovereign bond represents an important step toward creating a market for SDG investments. What do you think of this instrument and how effective it can be, and what the sort of outlook is like for creating a broader market for these bonds?
Well, I think that, looking at the SDG financing and just the financing gap that there is, which is about 2.5 to 3 trillion a year, is very, very large. So essentially, there is a huge need to have the private sector involved in SDG financing. And Mexico's inaugural SDG bond really offers a very interesting and innovative framework to allow issuers to come and get financing to meet their SDG targets. I think Mexico has done a great job in terms of working with the UNDP to come up with a framework that enhances its budget transparency, as well as really enabling a geospatial mapping of targeting the expenditures that it will raise from the bond proceeds to address where the needs are greatest.